But in and of itself, I think that the capital that is required in our country, particularly for innovation, I think the private equity industry plays a very important role in bringing that capital. And unless they are able to exit with profit, why will they come? So if you want capital to come, it must have an opportunity to go. And therefore, that cycle of coming and going must be maintained, and people must make money, otherwise why will they come? So to us, that is a good thing. That's not a bad thing. But doing it the wrong way is something that we all need to think about, worry about.
So may I suggest, when people ask me what to look for when investing in an IPO, of course I have stopped investing for many years now. But I tell them that look at the promoters, because that's the key. Look at the risk factors, especially the first 3 or 4, in case the company has a non-compliance or a criminal or a litigation kind of record. But also in case the PE there is a PE company, and if that is exiting, if they're exiting fully, then it's a no-no. If they're exiting half-half, then also you have to be doubly cautious. But if they stay invested more than 50% after the IPO, that means they have insider information. And if they are investing, they choose to remain invested after the IPO, they're not exiting, then probably it shows the confidence of those PE investors. Is there any merit in the belief that PEs cannot exit beyond a point in an IPO? Because they've stayed for 8-9 years, can we put, I know it's anti-market, but I'm only saying that this whole practice of, or I leave it to you.
I think, as you said, the information about what they are doing should be disclosed. And then an informed investor should take that information and decide and vote with his wallet. That's our entire regime is disclosure-based. So I don't think we would like to change the fact that everything that we do is to say we believe in the market, and so long as there is adequate disclosure, it's up to the investor.
Okay. I'll come now to a very difficult subject as far as I'm concerned, which is the objects of the issue.
Sorry?
Objects of the issue and issue fund utilization. Now, as we know that, especially with the new age businesses, the objects may not necessarily be for capital expenditure or fixed assets, or they're very fungible. They could be looking at acquisitions, they could be looking at working capital. In some cases, they could be deleveraging. And SEBI has been very liberal in terms of allowing a general corporate purpose. But we know that companies require money or want to raise money much beyond that 25%.